Welcome back for another AMC Daily Update. Today was a good day for me. I want to start today on the 1-day chart. As you can see, I have the recent run up shown here, and then a downtrend extending from the peak of that run, and this trend line. And this is a Bulkowski trend line, and I say that because it's drawn per Bulkowski's instructions. In fact, I just want to show the book really quick. This one. From this book, I get this trend line study analysis, and it has to be the most useful analysis that I have ever seen. The Truth About Trend Lines, Chapter 3. It's incredible. It'll change your analysis. It'll make you wonder why you're doing anything else. For me personally, it's been fantastic. So, let me talk about what happened on the 1-minute chart today. Obviously, on the daily, we're still in this downtrend. And it's going to kill me because people are going to identify that downtrend and see that daily candle and say, bullish reversal, hammer. And that's not true. That's not a hammer. Does this look bullish? This doesn't look bullish to me. This looks like the price opened, got rejected off of a level of resistance, and then was sent lower down to the next level. And naturally there was a bounce there, and this is typical to see a bounce off a level of support and resistance, but that's not a bullish bounce. It's not. It's a bounce, and if anything, right? If anything, we formed this bearish sort of consolidating pennant, right? You know, that looks just inherently bearish to me. So we've seen this pattern before several times. It's just a fractal measured move down over and over again. So I don't want to cover that. It's getting kind of boring. And the downtrend's getting pretty predictable. Let's pull up something that I want to share. This was my day trading today. I don't remember what chart it's on. Here it is. Okay, so let me run through the day as I saw it live and share the trades that I had. So I slept in, of course, so I missed this initial downtrend, and I would have bought a put right up here as soon as the price rejected at that $21 level, and I saw the RSI make that decline. I would have entered a put, and I did that actually earlier this week. Let me zoom out a little bit, because we saw the exact same setup here, right? Initial open, boom, level of resistance, shot down. And then you see this weird corrective wave up. That's the same thing we're seeing today. And we saw it again here, boom. Rejection at level of resistance, sent down. And then this one didn't quite correct, it just kept falling. Oh, and this is actually all part of the same extension. That's nuts. So pretty common, you see an open, price hits up against that level and then shoots down. Like, the morning open is a great time to be playing puts right now. The downtrend is so strong. But I slept through it, whatever, that's okay. That's part of a conscientious effort on my part to not let the price control my life. You know what I'm saying? I am going to sleep a little bit. Nonetheless, I woke up and I got here about the time the price was finding its first bottom. And right when I saw that uptrend break, which was right here at this candle, I entered that put. The price then did rise, but I wasn't too worried about it because the retraces of these miniature measured move down are very predictable, right? Like, there you go, almost exactly at the 61.8% level. That's where we saw that price trend reverse and head lower, which was expected. So I held on, and boom, we found a whole nother leg down, and that was great. I love entering a position and then going green right away. I hate holding red. Holding red's stressful, and then I have to think about it while I'm holding it, and I just don't like it. Now in yellow, I have something here I want to share. You can see again, the price here was in a downtrend, dropping, and what's the implied volatility do? It's rising. To have the IV rising against the price falling like that is a divergence, and I'm looking for that. Typically, after that happens, we enter our corrective phase of the measured move down, or we see the IV continue to flip. Here we saw the corrective wave start, and then the price started to drop and move lower. And there was a good level of support here at $19, so that's probably going to be an important level tomorrow. But ultimately, I thought we were seeing a bear flag shape up, right? So you see that I have two parallel red dashed lines here. I thought this was going to be a half staff flag, and we'd see another $2 drop. And so the price broke up and out of that pattern, which I didn't like. And as soon as it did occur, and it was at this candle, Not that, see, I have this just a little over to one side. It should be right there. It was at that candle I said, you know what, I'm out of here. And so I took profits on my put. And so this is in red because I sold it. I know, if you turn on the trade buttons here, you can see buy is in green, red is in sell. And so that's how I have these options labeled as well. So I bought that put. It was an April 14th, 1850 put for $95, and then I sold it later in the morning for $117. That's a $22 profit. That's a win for me. And you probably can't see it, but I have a little 4 down here too. And that 4 was the cost of a trash put. I call trash puts what they are because that's what they are. They expire the week of, and they're far out of the money, and they're probably not going to perform very well. So it's okay though, because I made $22 today. If I spend 4 of that and I lose all of it, that's perfectly okay. And that more than covers my loss from Wednesday. So if I have $19 of losses between Thursday and the trash put, and I made 22 today, that's good. And now that's a risk I'm willing to take. Because if we do see that measured move down extension like I expect, we're gonna see another $2 or $3 move down tomorrow. And at that point, this put is going to appreciate a lot. I'm going to make some money. So it's a high risk, but it's actually pretty low because it's only $4, right? So it's kind of like a low risk, high reward scenario because of how I've played more conservatively earlier in the week. Play responsibly. After that, you can see I have this blue line going up, and I did that to show this divergence in the RSI. Let me blow up the RSI a little bit, pull it down. You can see we had flat peaks in the RSI here for a while, this first line, and at that point, the price was setting higher highs. This is technically a divergence, okay? So I was expecting a breakdown, and we didn't really see that. Instead, we saw this funny level of support, and the price did eventually move higher, setting an even lower peak on the RSI. So we had another instance of bearish divergence. This is like an extended bearish divergence kind of a deal, and that did kill the rally. But there was some support here. And so this intraday green dash line, this is our corrective phase, our phase 2 of a larger measure move down. It's all just fractaling together. We saw several touches of that support. And as you can see, the range between the support and the price grows smaller and smaller until the very end of the day. This is what's killing me. I think if the markets were open for another hour, the price would have dropped further. I'm gonna go ahead and open after hours. I haven't looked at it yet. And I bet you nothing's happening. I just like to get a peek every now and then. Let's have a look. Whoa. And yeah, you can see that the price is starting to move down in after hours. So we'll see what that means for tomorrow. There's not much of an uptick in implied volatility, but you can see that it is ticking up very, very gradually as the price is dropping in after hours. So maybe tomorrow we get a nice big dump, but I don't know. And I say that for a couple of reasons. I'm gonna back out into the 15 minutes time frame, and I'm gonna show my second V-top. This was the first V-top that I identified, and I wanna show this and explain why I think we might be able to see a bounce here. As you can see, we did meet the target for this V-top right here, which was 1987. That we barely touched it yesterday, came up and then pierced through it this morning, and that was a sweet rundown. Now the price has come back up to about that level. Why I think we might bounce though is because the handle of the larger V-type top could begin at this point. You can see here we had the V, boom, big peak, came down. Well, I guess the peak's actually over here, but I illustrated it at this other high. And then we had this extended handle before the price moved down. And what's really interesting is that it's less of a handle and more of just a straight up channel, right? Look at that. That's a downward channel, isn't it? Very curious to me. It's almost like the V-type top just had, it is an extension, but it's almost like the momentum slowed down. And when the momentum slows down, it's actually a more predictable, stronger trend. The steeper a trend is, generally, the less stable it is. So to see the trend slow down was actually pretty encouraging. Now I want to show the bigger V-type top and why I think we might see a bounce here. It's because of that handle. Now let's see, which chart is it on? Third V-top, here we go. So as you can see, the price has fallen below the 38.2 retracement level, which in our fractal would indicate it's time to start seeing that, that handle start to form. and I don't know where it's going to occur, if it's going to point up like this, or if it's going to point down like a downward channel like the last one did. But you can see the RSI here on the 4 hour starting to flex. It's going to start coming up maybe. It's possible to see a bounce. What's really exciting is to see the implied volatility trending up on the 4 hour. That's great. Price is dropping here on these 3 candles, and the implied volatility is rising. This could cue to me that the dump is about to follow. I'm going to stay on the 4 hour chart and take a peek at my third measured move down really quick. And you can see that this trend line, this green trend line here, the thinner dashed line, this one has been broken, and now the price is starting to head for this other downtrend here at 17. So if we do see another $2 drop from 19, that's going in for a test of this trend. And I don't know if we're gonna break that trend this week or next, but if we do break that trend tomorrow and the price keeps going, it could be a really, really tall red day. And I'm waiting for that vertical run down to establish, and it might start at this level. I know that's crazy. Look at all this downside. How could there possibly be this much downside? Well, the price rose well over 100, almost 200% in the matter of a week and a half. I mean, come on. It's often said that the price falls faster than it rises, but in AMC, that seems to be backwards. It seems to fall longer than it rises, and this was a long rise. So I expect the fall to be even longer. Look at that, you can see the RSI reaching down out of overbought, and then just continuing to move down and down and down. I want to see what that looks like on the 1 day. Yeah, it's pretty steady. It's almost as steady as it was on the way up, coming down. Now we have had 2 days of lower than 30 period average volume, but you can see what has been higher than it has been earlier this week. So I think tomorrow is going to be a signal day. Tomorrow is either going to signal us that we're going to have some consolidation and some sideways action before another move down, or even possibly an upward breakout, but that's really not on the charts, I don't think. Or whether or not we see just a spectacular fall. I mean, this daily chart is looking very ugly. You can see we have tall wick, tall tail, tall body, tall wick, tall tail, tall body, tall tail, tall body, tall wick. And then this candle seems to break that trend. It looks like a bullish reversal. I don't believe it is. There's an area of horizontal congestion here, and the price is just working its way through this. I believe that once the $20 to $21 region is lost, that the price will find some brief support in the high teens before cascading down back to $12. That was my take on the daily chart, and I'm doing good. I'm 3 for 4 days green on day trading puts, which is great. We'll see how I do tomorrow. That's what I got.